A very warm welcome to you. This is Business Daily on Trust TV, where we bring you up to speed with trends in the Nigerian business space and across the global economy. My name is Chiamaka Nendu, and we are set to do just that in today's edition of the program. The Nigeria cement industry went through a tumultuous 2023, of course, due to the increased rallying around the market, which was due to the volatility in the foreign exchange market. And it may look as though the market is up to a great start in the year 2024. Well, how long do we expect to see the increased improvement within the Nigerian cement industry to last? Well, joining me now to discuss that is an equity research analyst in the person of Mustapha Umaru. Thank you for joining us on the program this morning.
Thank you for having me.
Okay, let's begin with a review of the year 2023. Like I said before, the year 2023 was quite tumultuous. We had seen cement prices increase, and this was due to increased operational cost and volatility in the foreign exchange market, as well as high inflation, which was expected anyways. We had seen global inflationary pressures. But what is your view on how the industry performed in the year 2023?
Well, thank you for having me. Like I earlier said, 2023 was characterized in the cement industry as a year of low demand. So, basic economics say that for prices to go up, when there is a reduction in demand, players might have to increase prices to protect their profit margins, and that was what we saw all through to the year 2023. If we start from Q1, we saw that Q1 had a lot of distortions in commerce. We saw that the Naira cash crunch affected the demand of the cement players in 2023. Heading down to, we also saw the general elections causing a lot of distortions in commerce, and this affected sales volumes of a lot of cement players in 2023. So we had to see, starting from Q1, we started seeing cement players increase their prices to be able to protect profit margins. It will head down to the other parts of the year. Like you have earlier said, inflation was high a lot last year, leading to increase in input costs for many of the cement players. We saw the Naira devaluation also in Q2 last year. This led to an increase in a lot of cement players' finance costs, affecting their profitability. So cement players had to increase their prices in order to protect their books. Just for about 9 months 2023, Dangote Cement increased their prices by 17.49%. Lafarge increased their prices by 23%, and Boas Cement increased by 21.4%. On the flip side, you will see that volumes produced were down for both Dangote and Lafarge, with only Boas recording an increase in volumes as of 9 months 2023. So we saw a lot of distortions in the cement industry last year, from the Naira cash crunch to the general elections and the Naira devaluation, coupled with the fact that the inflationary environment last year was really high, and this led to the increase in cement prices that we saw last year.
Okay, we are currently in a new year, like we have pointed out. And what is your outlook for the industry in the year 2024? Already it looks as though the market is up to a great start. We saw yesterday alone that there was a lot of rally across the industry. Of course, we did see as the OSHA index crossed the 100,000 point for the first time ever, and this was due to major rallying across the cement industry. We saw the BUA cement, which gained about 9.98%. Dangote Cement also gained about 6.49%, showing how much of activity is going on within the industry. So what is your outlook outlook moving forward into the year, moving further into the year? What do you look forward to within the industry?
Okay, thank you. So if you look at the industry, there are a lot of factors that measure how the market plays out. So from my books, I see two types of factors. One is the fundamentals, and the other is the sentiments around the market. The market is currently enjoying a bullish run, and obviously stocks around Dangote Cement and Boa Cement will be the very first to enjoy those bullish runs, because they are fundamentally very strong stocks. They are stocks that they are high cap stocks, and investors would want to protect their investment by investing in fundamentally strong stocks that have a track record of dividend payments, stocks that have also a track record of revenue growth. So this is what you see with the cement players, and obviously when there is a bullish run when there is a bullish run in the market, stocks like this tend to have a significant appreciation in share price. Like you have earlier mentioned, so for my outlook for the cement sector, fundamentally, we are coming from 2023, we have seen a low base here in terms of, especially in Q1, where little or no commerce happened due to the cash crunch and the general election. So I expect to see demand increase this year. I expect a lot of demand to increase this year in terms of private spending, real estate activities coming up. Most of the challenges we saw, most of the distortions we saw last year, I do not expect them this year, ceteris paribus. I expect that most of these distortions will subside this year. So we expect to see an increased spending from the private players, boosting cement demand in 2024, private cement demand in 2024. On the government level, we expect to see an increase in capex expenditure. We have seen from the numbers that there was an increase in capex budgeting, but historically, our worry has always been around the implementation of the capex budget. So, based on the discussions that happened last year, where there was a transition government. The elections happened and there was a transition government, and the government came to meet a lot of problems on ground. So we expect to see an increase in the implementation rate. If we can, over around 50-60%, this will do well for the cement industry and boost the top line of the cement industry. So we expect to see, so those are some of our expectations. We expect an increase in demand totally, emanating from both the private side and the government side. On the market, I expect for as long as the bullish run continues, Boa and Dangote and many of the cement players will always be one of the first picks for many of the investors, considering the fact that they are heavily capped. Blue chip stock has fundamentally strong stock has a history of consistent dividend paying. So as long as the market remains bullish, I expect Dangote and Boa to remain bullish.
Okay, usually there is a ramp up of volumes in terms of building and construction within the December to March period due to the seasonal factors that contribute to building and construction. So far, have you talked about how much of demand you expect to see in the year 2024, but so far, have you seen an increase in the levels of building and construction due to the seasonal factors that we are currently experiencing?
Expectations around the seasonal factors expect demand to. I expect that this will push demand in Q4 2023 when the numbers come out, and Q1 2024. We haven't seen the numbers yet. The numbers are not out, but there's a lot of positivity around it. Talking to industry players, that Normally, this is their peak period. This is the period where production is usually on a high level. So we expect to see an increase in sales volume for many of the cement players, and this will come from the fact that there was an increase in demand. And like I said, many of the factors that affected demand in 2023 would have started subsiding from Q4 2024. So considering the fact that this is their peak period and many of the factors started subsiding from Q4 2024, we expect to see an increase in demand. This should increase demand in this period.
Okay, let's talk specifically about a major player and stakeholder in the Nigerian cement industry. Speaking of Dangote Cement PLC, that hit a milestone of 10 trillion naira on Tuesday, and that's the first company to attain such valuation. How are the market and the industry sector specifically reacting to this?
Well, like I've earlier said, right? When you speak on the market, you speak on sentiments around it. And yes, you have earlier said Dangote hitting 10 trillion is a good thing for the market. It shows that the market is a viable option for investment. And Dangote is one of the fundamentally strong stocks. Year to date, we've seen their share price increase by about 116%. So this shows that when there is liquidity in the market, when there is a positive trend in the market, we would see Dangote is one of the first stocks that investors will run to, just because of the fact that it's a fundamentally strong stock. There are a lot of positive things around the Dangote group as a whole. We hear the refinery coming out. We hear the investment by Otedola coming in. Just to note, every time that Otedola comes into a stock, we usually see appreciation in those stocks. We saw it in First Bank a few years ago, and we saw it last year with Transcorp. So Otedola coming in also could have contributed to the fact that we have seen a huge rise in their share price, leading to an increase in their market cap. So yeah, there are a lot of positivities around Dangote Cement, and apart from that, when there is liquidity, when there is a movement in the market, Dangote Cement is a fundamentally strong stock and is one of the stocks to benefit from it, and that's what we're seeing.
Okay, you talked about how whenever Otedola gets into whatever stock, we find that the market capitalization rises. But let's ask you now, what is the Otedola effect? Why does he have that much of an effect, like what we're seeing play out with the Dangote stock? We saw it with Transcorp, like you rightly pointed out. So what is the Otedola effect?
I think many people know that Otedola is a serial investor, and he would not just put his money in investments that are not secured. So I think many people try to follow his line. And like you said, like I've said earlier, when there is a precedent that, this thing has happened, investors will follow sentiment. It happened with First Bank. We saw an appreciation in their share price. Last year it happened in Transport. We saw a further appreciation in their share price. This year we've seen it with Dangote Cement. We've seen an appreciation in their share price. There's precedents to show that whenever you enter the stock, there's always an appreciation in their share price. So investors will continue to follow that trend because they believe that this is a serial investor, this is a man that knows the market, and this is a man that knows the way to invest fundamentally strong stocks. And also, you see him investing in stocks that are fundamentally placed to benefit from any opportunity in the market. So that's what we're seeing. So, based on precedents, investors will always follow his track.
Okay, just before we go, in 1 minute, what are your thoughts on the BUA cement factory price slash? And do you expect to see the possibility of price reactions from other key players? In 1 minute.
Okay. Firstly, the BUA's price slash is and it's from the X factory. So if you go to a lot of retailers, you will not really see the impact of those BUA price slash, because of when they buy from the factory, other factors come into play. Logistics, transportation, and we saw last year, we saw the first subsidy removal boosting increases in transport. So yeah, when you look at that, there is really no significant difference. That's on the retail side now, between what they were selling before, that's BUA, and what they're selling now. Do I think that there will be further decreases in prices? I do not think so. I think that industry demand is still currently low, and though expectations though there are expectations that demand would increase this year, I don't think demand will be at a level whereby players will be forced to reduce prices. The goal of every investment is to protect profits, and as long as demand is still not at a power where they can reduce prices, I don't think that there will be price reduction. Let me also add that BUA reduction in ex-factory prices was on the premise to boost demand in their stock, in their cement prices, considering that they are increasing their production capacity in Q1 2024. So the increase in production capacity, coupled with the reduction in price, was expected to boost demand in their stock. So the numbers from Q9 end suggest that there had been an increase in demand. So we don't expect to see a decline in their revenue, in BUA's revenues, considering the fact that more was produced, but they were selling at a lower ex-factory prices. But on the retail side, research suggests that there was no significant price decline in the market.
Okay, Mustapha Umaru, equity research analyst, who has spoken extensively on trends within the Nigeria cement industry. Thank you for your insight on the program.
Thank you for having me.
And this is where we draw the curtains on today's edition of the conversation on social media. Let's hear what you have to say about the topic of today. My name is Chiamaka Nnendu. Thank you for watching, and bye for now.